Good morning. I'm Phillip Statler. I want to thank you for tuning in this morning for the morning show with Dave as we talk about economic events that happened yesterday and could be happening today. Hang on, Dave will be with us momentarily.
Time to check in and find out how Wall Street's doing this morning. How is that 401k and IRA treating it? Well, yesterday, not so hot. This morning, we'll find out. Let's head downtown. Offices of Statler Financial Services, downtown Sebring, where Phillip Statler is standing by. Phillip, good morning.
Hey, good morning, Dave. Hope you're doing well today. It's Friday, and I'd say I'm looking forward to the weekend, but I think I'm working all weekend. So.
Oh, darn. Oh, that's right. You guys are entering tax season around there, aren't you?
Yeah, we are. So we got a few of those to get done.
Understood. Well, yeah, my heart will be with you. For me, I'm going to play golf, so I'll be thinking of you in sympathetic terms while I'm out slaving over a golf ball on the golf course.
Sounds like fun. I wish I could be there.
Hey, when I got an opportunity, rub it in. Normally, I'm the one that works 7-day weeks. When we got on the phone this morning, first thing I said, I'll bet you nickel the housing data from yesterday came out about 2 p.m. because that was kind of when the market turned southward. It wasn't as much of a disappointment as I honestly thought it was, huh?
Well, not as far as the consensus estimate was. I mean, it came in at like 4.94, and it was expected to be 5.01. So very small miss as far as consensus goes. But if you look at the numbers, they're down. They're down month over month. They're down year over year, and so they're down when you compare it to some of the historic numbers going backwards.
And in absolute terms, one of the top of the hour news reporters was saying something like the worst in something like 10 years, which nobody likes to see, especially when you use that number 10 years, because 10 years ago gets us back to the 08-09 recession, which nobody wants to think about, right?
Well, yeah, if you go back 10 years, it gets us into 09 where, we're starting to come out of not yet, but we're almost starting to come out of the bear market, and things started to pick up. Slowly, but started to pick up.
It just wasn't a pleasant time in the life of most of our 401ks. The other information that came out is yesterday we quoted the durable goods orders, which were, not good. They were off by a little bit from the consensus estimate we had, but just kind of an indication of how uncertain anybody is as to which direction this economy is going. We were confused by the fact that there wasn't a reaction of great size to it in the direction we thought. There were a few estimates out there that were expecting something considerably bigger than we had out of our tickers, right?
Yeah, exactly. There was another another estimate out there that said that they expected to be at 2%. Well, 2% compared to 1.2 versus 1.5% compared to 1.2. There's a pretty big difference there. And so I guess it kind of depends upon what camp you're in and what group of economists got surveyed.
When you shared that other estimate with me, like I said, it just emphasizes the fact of just how uncertain and how many different opinions there are on the economy. Generally, consensus estimates you and I look at, I see one of them and you see another one, and they're like 0.1% apart. When you start looking at better part of a full percentage point apart in terms of estimates, it really emphasizes that we don't know where the Sam heck we're going lately, right?
Well, it does seem to be the case, and I think everybody's obviously different economists have different opinions and different approaches to come to their opinion. And so that just shows you that there can be a disparity between what the quote experts believe.
Which kind of gets into the point of something you and I have been preaching for a long time, you a lot longer than I. Having an exit strategy and having contingency plans on your investment fund is just a really smart thing, given how uncertain things can get, right?
Exactly. I mean, I can't say that enough.
Understood. And I repeated it an awful lot, too, when you're not here. Kind of lead story that I had as far as earnings reports were concerned was Kraft Heinz. They end up writing down a bunch of goodwill and ended up really screwing up their stock price this morning from what I hear, right?
Yeah, they came in like 10 cents below estimates. Revenue also missed. And so, here's the big thing I think is probably hurting them more than anything is that they've got some SEC subpoenas out there regarding some of their accounting policies. And so I think that is probably some of the biggest effect that we're seeing on their stock this morning as it trades down over 25% today. And so, yeah, and let me just emphasize, the 52-week range right now is $41.60 to $70 a share. At the open right now, it's going to open at $35.90 something.
Offhand, I'd say somebody in the executive suite at Kraft Heinz is less than happy right now, but you kind of get the feeling when you write down an amorphous asset like goodwill, it sounds to me like they're kind of saying, well, we're gonna take it big time. Let's just get all the pain over in one report.
Well, I guess, I don't know what their philosophy was in making that call, but obviously they've made it, and it's caught the eye of the SEC. So it's going to be interesting to see what happens there.
Sure, a bunch of other household names in the daily earnings season. A lot of them names we hear about, right?
I do. Automation, Taylor, his course this year. I do more cast. There is Mike Jackson, who's been their CEO always. It's down 11th. He's going to be the executive chairman now. The chief officer is going to become the CEO. Some big names they're out there on the news. I mean, not the news, but on the advertising all the time. They inundate your email inbox. If you've ever tried to look at them anytime at all, they lost $1.12 a share. Which was better than expected. They were expected to lose like $1.28 a share. Revenue top forecast, and they've had a big increase in their customer count, and so they're being rewarded this morning. And as the market gets ready to open up. However, their stock is dropping a little bit. Providing services going up, and so they're trading down a little bit this morning. And Dave, I'm not going to have that number because my computer is just not cooperating.
I'll take the futures they look for. Futures for guys. Now it's really great. Almost 2.5% up to $10.60.
Yeah, it is. It's heading up, and it seems to be heading up pretty fast too.
Yeah, great. So Venezuela really messing up the markets on that. Gold is up a tinge this morning, but relatively flat, about $13.29. And overseas markets generally midway through their day, they're in green ink as well. Phillip, the computer and the internet might be uncooperative. It always is for all of us every once in a while, but I know you're in the office today. How do I find you to get some advice on stabilizing my retirement?
Devin, give us a call at 382-0037. Follow us online at statlerfinancial.com. And then join us on Facebook. Like our page there at Statler Financial Services, where we take what we get in the morning here with you and I, Dave, and we post it up there in video form. So a good opportunity to catch up in case you miss us. And then every weekend, join us on the Statler Financial Radio Show, noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 730.
All righty. Look forward to that every week because the information is incredibly useful. Sir, you have a great weekend. We'll see you on Monday. Fair enough?
All right, fair enough, man. Take care.
Do appreciate it.
Hey, I want to thank you for joining us today. I know the computer and the audio may not be really good today, a little sketchy, but thanks for joining us today, and I hope you'll tune in tomorrow. And if by chance, share this video to others that you know. Thanks, and have a great day.